Hello, large cap stock swing trading daily chart analysis using long up to long swing trading strategy. So if you have your stock watch list open, you'll analyze stocks on them after the market close on Friday, February 21st, 2025. We are going to use an example here to share with you one way you can analyze your stock if you are using long up to long swing trading strategy. So we have two stocks on our list that we like to analyze today, and the first one is LII. So as a swing trader, you can use a daily chart to analyze your stocks, and you can use either maximum daily chart or 1 year daily chart. So we are going to use maximum daily chart, and our first stock is LII. So just by looking at LII from far, we can see that for a year and a half it went up, like from compared to the past it is kind of sharp up, and if it's going to come down to any one of those support line or trend line, it will be a tall mountain, and therefore this side will be like the upside of the mountain wall that this support line is supporting. So we have three trend lines that we can buy at, and it does make wide mountain though before it'll touch base with this trend line and then climb up here. That's the way it did it previously. So it touched base with this trend line. We bought it. When it started going up, it went up, but it was not able to reach the high, and went back down and went up. When it reached this area, it was like 400 profits in the portfolio, but we didn't sell it because we were aiming for the next high. But then it pulled back, and when it went up to somewhere around here, we have about 200 profits or so. We sold it. So we are going to go to, in fact, we are going to extend this down a little bit. And if we extend it, it seems to be going below it. And technically, when the price went below a trend line, a lot for me, that trend line ended. But because I'm tracing long trend lines, I'm going to continue the one that is going below it to see, to pretty much to see what is going on. If it's going to use the back to rest on it or not. So we are going to go to 1 year daily chart. We are going to go to 1 year daily chart so that we can make the price bar bigger. Yesterday, Friday, the price dropped. In fact, the price dropped quite a bit, straight back to the trend line. So you can see where we bought it, and we kept it for a while. We sold it. So by looking at it, we don't know if, because it's making lower highs, this one lower than this one, this one lower than this one, this one lower than this one, we don't know if it's working on the descent or not. So we are just going to keep observing it. If it start going up from here, we might get in, but at this time that we have three lower highs though, I don't know what is really going on. But again, when it reach a high here, it make it two smaller one before it did this one and this one. So we'll just keep observing. If it start going up from here, yeah, we'll decide if we want to get in or not, because it could decided to go down. So we had to be very careful if we want to get in, because it just feel like by looking at 1 year daily chart, you may not really have a big picture of the trend of this stock, like by comparing this 1 year movement of the price to what it has done in the past. Therefore, maximum daily chart give us a bigger picture of it. So, but and I will say it was good that at least we lock in some profits at this point here, because shortly after that it pulled back the past 2 days. So, and we could have made that same profit around this area and just lost the excess here, but we had to stay in it for a while to be able to make that profit, since we didn't get out at some point here. So we are going to go back to maximum. You can see that we do on the 1 year daily chart, we are not seeing the two lower trend line, since it's in touch base with it within 1 year time frame. So we are going to go to the next one, and the next one is LLY. LLY is highlighted because we bought it and we have not sold it yet. And we bought it somewhere there. The arrow pointing up shows where we bought it, and it pulled back, and pretty much is doing what it's doing. It's even pulled back to this trend line. So where we like to buy it next after we sold it. So for a while now, it has been negative in the account, and we bought it in August or so, and we still have it in the portfolio, and for the majority of time has been negative. So we are going to go to, and again, you can see that it start climbing up and climb sharply here. So we don't know if this is going to be the trend or if it's going to come back to this. It does not make a big mountain. I'm not seeing a big mountain on the chart. It usually move close to the trend line, so which make me think this trend line could be, it must well decided to just continue following this trend line. Yeah, I'm not sure. We didn't highlight it, but we can continue tracing it alongside this one as well. But usually it does not make big mountain, tall mountain, not even wide mountain. So if it kept the same pattern, but went up compared to this line, and but kept about the same pattern along, but for some reason it came below the trend line here. So, and by being that much below it, technically that trend line ended somewhere here. But we are going to just keep observing it to see what is really doing. If we go to 1 year daily chart, in 2024 we use short up trend line swing trading strategy, and we purchased it and sold a few times, or multiple times will be a better term, and pretty much purchased it again, and shortly after it pulled back on us and has been pretty much down. It has not gone back up to where we bought it yet. and we do not want to sell it at loss. So to keep negative stocks or stocks whose price went down in your portfolio, it's good to start with a good stocks, so that even if you have your money frozen in those stocks, at some point it'll go back up for you to have profits and sell them and lock in those profits. So it's a good idea to handpick stocks to create your watch list of stocks to swing trade. And if you're a beginner, starting with large cap could be a good idea, as they are not too volatile, and with long optional swing trading strategy, you have more flexibility to get in. If you do not get in early, you still have time to get in. And to sell it, if you don't sell it right on point, you'll still have time to sell it as well. It won't, change direction sharply or quickly. But yeah, so we are just going to, seems like it's making another short trend line here, but again, we are just going to keep observing it. The price will need to go high past where we bought it before we can sell it. So this concludes how you can analyze your chart if you are using long optional swing trading strategy. You compare after the market close or before the market open, the next day, early in the morning or late in the evening after the market close. You can do your chart analysis using daily chart and compare the price, see how the price perform during the day when the market was open, and compare the price level to your entry level, which is the uptrend line or the support line, the long uptrend line that you selected to buy the stock at. When you move back down to the trend line, you compare both, and if one of your stocks is close to the trend line, you pay close attention to it to see when it stop making lower lows and start making higher lows. And after you observe few higher lows, you can buy at the first or second green bar that follow a pullback. And for the one you already purchased, you compare where the price is to where you want to exit. And for large cap stocks, upward large cap stocks, if you purchase it at the trend line at the valley of the mountain, once it reach a peak, you can sell it and get out. That is just by default the principle we go with. But sometimes we might get out before it reach the peak, depending on the behavior or the price movement. But yes, so that is the rule behind it. And the price bar, when it's red, just mean that day the price went down. The price in the evening when the market closed was lower than the price in the morning when the market's open. So, and the price will be highlighted, the color of the price bar as well. So the green bar means the price in the evening was higher than the price in the morning when the market's open. It will be a green bar. The price went up that day when you compare evening price to morning price. And it's good to have a stock watch list of stocks, that a number of stocks that you think you can analyze within an hour every day to get to know those stocks that you pick. And we have a stock watch list of large cap, more precisely upward large cap. And if you are looking for ideas on how to create your own watch list, we have a playlist in the description where we a catalog videos related to how you can create your own watch list. And take your time to to create your own watch list of those stocks that you you believe in, that they are strong companies, that they'll be around for a while, so that if you purchase their share and it goes down, the price goes down, you do not panic, but just leave it in your portfolio until the price goes up, and you sell them. And in the meantime, you analyze the chart to see if you purchase it at the wrong area, if you got in while it was reaching the peak, or after it reached the peak, or things like that. And or if it's just a stock that is now reacting well with the strategy you are using to swing trade it. And having the stock watch list at the end of the year, you can remove the one you highlighted throughout the year, that the ones that you highlighted throughout the year that you didn't have a good experience with, it does not align with the strategy you are using. You can take them out and go through your master list again to pull some good ones to replace them. And over time, you'll have just that curated short list of stock watch list that you can analyze within an hour, and you just analyze them, trade them from that list. You just put in the time. It took hours to create that watch list, and once you have it, you will you have your own watch list to trade from. It's good as a beginner to start with large cap, and later, if you want to have a watch list of mid cap, a watch list of small caps, you can as well. But the large cap do not fluctuate quickly, therefore you have the time to trade them using the strategy you are using, and focusing more on the strategy rather than trying to keep up with the fluctuation of the stock price. And again, something to keep in mind, you won't make a lot of profit trading those large cap that do not fluctuate quickly or wildly either, but at the same time, you are not losing money trading them. And as a beginner, you can just start with one share or $300, even $100 if you are using low up to long swing trading strategy. Even $100 is a good dollar amount to swing trade with, assuming that it is high enough to meet the requirement from the brokerage firm to open a brokerage account or a Roth IRA. And even if that's a $2 profit, $1 profit you make, $5 profit you make, as long as the profit is higher than your brokerage fee from trading, you are fine. It's not so much about the profit, it's about testing the strategy you are using with the stocks you have in your watch list, to see if the strategy is a good fit for the stocks you have on your watch list, and fine tune that strategy to mold it into a strategy that is really match your personality, tap your risk level, and can help you reach the goal, the financial goal that you have in mind. And being financial independent is one of those goals, or if it's one of those goals. So, and you just aim for the next high, or 5% to 10% return. You can get out, lock it in, and wait to get in again. And we have watch lists, playlists for those videos related to watch lists in the video description. Thank you. We thank you very much for your time. We thank you very much for all of your comments. We thank you very much for watching our videos, and we thank you very much you all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money, and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Thank you. Just start small until you find a sustainable way to swing trade. That way you know that what to expect every month income wise based on how you trade, and little by little you will increase your capital by accumulating profits, locking them in when you sell, and keep adding more of your own money there as well, so that you work hard, you get paid, and you turn around, you put a portion in your investment account and use it to swing trade and make profits from it. So your money will work for you. Thank you.